it's really, really nice. It's a very comfortable feeling being around a lot of people that you've known all your life. And, it's only a couple months a year, but it's really very pleasant. Then you see them all in the same restaurants and the, you know, small town shops and whatever. So it's fun.
Good, good.
All right, let's go ahead and get into it. This is The Big Picture. I'm Rich Swerbinski with Onward and Upward Consulting, joined, as always, my esteemed colleague and co-host, Rob Chrisman. Rob, good to see you this week.
Nice to see you too.
All right, back in the States. And this week, we are really, really pleased to be joined by the man that founded Freedom Mortgage in 1990, their president and CEO, also part owner of the Philadelphia Phillies, Stan Middleman. Stan, thank you so much for joining us today.
Well, thanks for having me. It's a treat.
All right. Looking forward to getting into a bunch of topics, everything going on in housing, maybe even a little baseball talk. And as always, for our attendees that are here on the live, any questions, comments, feel free to interject them into the chat or the Q&A, and we will incorporate them into the show. So, Rob, getting things kicked off here. 'Tis the season. A lot of political stuff. I know how much you love talking politics. Your hands up already, Rob.
I know. I need to break from the script right off the bat. Stan, if you were to go to a Philadelphia Phillies game, secret shopper kind of thing, just show up, buy a ticket. Would they know who you are?
By this point, pretty much. Yeah, by and large.
Okay, good. I always wonder, if owners show up just to kind of be that secret shopper and see how the ticket agent is, the ticket taker, the fellow or
yeah,
gal
that's
selling
not
soda
really
pop.
my job. I'm not really sure what my job is, but I try and add my 2 cents and hopefully I'm helpful. And I'm probably most helpful around budget meetings since I have a lot of experience around budgets. But we really want to win, so it's fun, and we're doing everything that we can to try and win a championship. So we're working hard at it, and it's pretty exciting to be around day to day.
Good. Well, best of luck to you.
Thank you,
Rob. A lot of political news, both candidates out there in the last week, just talking about different housing related issues. Former President Trump did a pretty expansive interview with Bloomberg Business Week where he touched on the Fed, interest rate policy, housing, home builder costs, and other things. President Biden came out with a proposal, nationwide rent cap. Of course, this would have to go through Congress, and no chance that's going to happen before November, but still significant in that getting a look into the mindset of some things that could happen in a second, I'll call it Democratic term. Looks like Biden's future could be a little up in the air, but your thoughts on a nationwide rent cap proposal that was thrown out there this week?
Well, that's a political issue. So I guess we should start off, Rich, by asking you, who you're going to vote for in November. No, I'm just kidding about that. I like to see people's deer in the headlights look when you ask them, when you throw that out there, and then you quickly retract it. I would say that mortgage bankers in general understand the concept of a free market economy, supply, demand, creating a product that is of interest to investors. And if you don't create a product that is of interest to investors, then you're not going to be in business long. And you can't control interest rates per se, and you can't really come in this case, I think, and create some kind of rent control, nationwide rent control. I mean, I can imagine little fewer things that are less palatable or less doable than that. If you look at controlling the free market economy, I think you can get into Governor Newsom in California saying minimum wage for fast food workers is now $20 an hour. And I think economists everywhere would argue against that. because it's just not fast food workers who are impacted by that, but food workers everywhere and people in lower paying jobs everywhere. And if you are a small business owner who's got 2 or 3 employees and you're paying them minimum wage and you're barely getting by, and suddenly McDonald's is waiving $20 an hour, it's very tough for small business owners to be able to retain employees in that kind of environment. So, I mean, and that's just one very quick example. If you talk about rent control, uh, I'll give you a quick example of rent control. Uh, when I was in the MBA program at Cal, we were all graduating in the mid 80s, and many were going off to get illustrious, well-paying jobs. One of my best friends stayed in Berkeley and got a very nice job in business in the Bay Area, and kept his, I think it was $250 a month apartment in Berkeley, because Berkeley is under rent control. And so he stayed in that apartment for a number of years. Who does that really benefit? Really? And so if you talk about nationwide rent
Well,
control
him,
per se, it's
it benefits him.
yeah. But I just think it's a I'm not going to talk about Biden versus Trump necessarily, but some of the things that we're seeing now are really just kind of vote grabs, for lack of a better term. And yeah, I would side with you. It really has no chance of passing. In fact, Stan, you may want to weigh in on this to some extent. I would say that any legislative changes from now until the end of the year are, I mean, the odds of anything really happening are pretty small, just like any election year. Tough to get anything
I,
done.
I think that's absolutely true. And, from my perspective, from a business perspective, not necessarily my personal perspective, um, no change is the best change, right? So, certainty, stability, consistency, those are things you can build businesses around. When you have a moving target or you're playing whack-a-mole with changing regulations, um, that's really hard. It's hard from a technological standpoint. It's hard from a performance standpoint. It's hard from a training standpoint. You know, with the government is become really an important part of business, and we talk about political business partnerships. And unfortunately, government's gotten really big, and corporations have gotten really big, and bureaucracy is part of our lives. And people aren't making decisions either in corporate environments or government environments. I think they're very similar, to tell you the truth, because people are very interested in protecting their turf. For example, in the government, if you have a budget, if you don't use it, you lose it, right? So you have to use your budget, which forces you to spend money that you may not need. And in corporations, people are really doing things to protect their jobs. Board members want to be board members. They want to continue being board members. Management wants to stay in place. Um, these are bureaucratic elements that are not driven by some of the capitalistic principles that we think about capitalism being. The capitalism that I was raised on in the 60s and 70s and 80s is not the capitalism that's practiced today. I'm not saying it's better or worse, it's just different. And I like to think that we run our business as a capitalist with a conscience and try to do the right thing. Um, but I'm not sure that's where we're heading. And we have a lot of government regulation. I was kidding with Rich saying that we're living Ayn Rand's nightmare. And that Atlas Shrugged kind of describes a lot of the way work gets done today. And I'm just afraid that we may be becoming more Orwellian, animal farmish, where some comrades are created more equal than others. Um, But in either case, I think we have some challenges that we have to face. And the reality is regulation and big government is a part of our lives, and it's part of lending. And we're going to have to really think about that as we go forward and build our technology and build flexibility and create plans that are really compliant. I used to think faster, cheaper, better, right? And now we have to add on that fourth element, compliant. So, running a profitable business that's faster, cheaper, better, and providing better products to the consumer also have to be compliant. And what is compliant changes. And I think that we have to be prepared to face that kind of environment. It's a little more challenging as time goes by, and it doesn't become less challenging. It just continues to get more challenging. So even when you change administrations, there's really not much difference between a Republican administration and a Democratic uh, administration, because they're both really driven by bureaucratic ambitions. And to be successful, you have to hit a target, right? So what is ambition? And how does a person that's in a bureaucracy succeed? How do they use that ambition? Well, to make somebody else's life more miserable. And if you have to lift yourself up by putting somebody else down, I think that makes you have to question whether or not you're really lifting yourself up, and whether you're really doing, to your point, good, or making the world a better place. And I think that the incentives are not properly aligned with creating a better world.
Former President Trump also made some news this week. The release of an interview with Bloomberg Business Week, spoke at length on a number of different issues related to fiscal policy, Fed policy. Rob, I remember talking with you about this on the show back in the spring. There was a report in the Wall Street Journal, late April, early May, that Trump advisors were talking about stacking the Fed Board of Governors essentially, and having much more influence on interest rate decisions. In this interview that just came out, Trump backed completely off that, saying flatly, yes, he would let Powell serve out his term, and no, he wouldn't nudge or encourage interest rate decisions. Rob, I'm not sure if you saw any of that interview. Semantics, just political talk, the thing he has to say, or something there?
Um, I don't know, Rich. I don't, I mean, this is turning into a political show. I don't know if you want that, but to some extent, I wonder about people who say one thing and then at some point later either say they never said it or refute it, say the situation has changed. And you could have, and I remember when that story broke earlier this year about Trump or his people saying, "Oh, we need more influence on Fed policy, on interest rates." And I was sitting there thinking, the Fed's supposed to be an independent body that aids in the stability of the United States financial system. And the Fed governors, the presidents of the various districts, and so on, Jerome Powell, serve for a period of time that isn't, they aren't up for renomination every year or two or three. So there is an attempt at stability. If you have them changing with every administration, then it's going to be a problem. I think every president wants low interest rates to help spur the economy. I'm not convinced that, yes, inflation's coming down, but I'm not sure the U.S. economy is at the point yet where we need lower interest rates to stimulate the economy. Housing prices are still doing well. Unemployment is still relatively low. Like I said, inflation's coming down. The consumer is still pretty strong. And yeah, credit card debt is high, but do we really need lower interest rates, or do we need a president putting his thumb on the Federal Reserve saying, I want you to lower interest rates. If you think about lower interest rates now, uh, we're probably not there. But like I said, every president wants lower interest rates. And I don't think sometimes the presidents or any politician makes decisions based on pure economics. So,
Well, I
yeah,
would think the opposite. They definitely don't make decisions based on economics.
well, yeah, well, anyway, go on, Stan. What were you going to say?
so, so I wholeheartedly agree. The economy is at full employment, and to lower interest rates at full employment is begging for inflation. It's just it's kind of they go hand in hand, and the fact that the inflation has come down um, is not really something that is permanent in nature. If we're going to stay at full employment. I think if the nation's going to be at full employment and the economy continues to grow, that's going to create a certain level of inflation. Now, we are getting some deflationary pressures. There are certainly technological advantages and advancements that are deflationary. And I think the thing that we're going to have to watch for is life in the world village has gotten to the point where it's kind of beyond the control of just our government. We're just getting to the point, and this is something that's happened over, Rob, you and I are probably similar in age. Through our careers, we've seen this evolve where we went from a regional economy here in the United States to a national economy to being a cog in the wheel of the world village. And I think in a global economy, there's a lot more moving parts, and you see a lot of what happens here reflected in the European Union and Britain, and I think that the influence of China, whether it's as an inflator or a deflator, is pretty big. And when you think about how does this relate back to mortgage banking? Uh, I heard our business was interest rate sensitive, and you always have to have your hand on the pulse, right, of where interest rates are going, so you can make macro type decisions. But I think you really need in the world to look at demographics. And I think one of the drivers that we're dealing with is the geopolitical uncertainty that is manifested as a result of an aging population worldwide in all the advanced countries. And that's really the big thing. And we get caught up in the little nuance of Trumpism or Democrats or Republicans. And I don't think it's about that. I think there are bigger forces at work here that we have to recognize are really what creates the nationalism. So if we are going to be the winner in a shrinking population, how are we going to do that? We're going to do that through immigration. And immigration is really important. And that's really the way we've grown our economy over the last 250 years is through the use of immigration. That's how our population became so large. We have so much open space, and we have the ability to leverage growth in our population. And by doing that, I'm not saying to open the doors to all crazy people and doing all crazy things, but the reality is that economies are driven through consumer spending. And if the number of consumers are going down, less consumers can't spend more or can't spend enough. So if you have a shrinking population and full employment, despite all of these pressures that are deflationary, you're going to have inflation. And I think we're going to be higher for longer unless we break that mold and build on some immigration and change the number of consumers in our country. And that's the furthest thing from what a political reality wants to say. That worries me more than anything else that's going on here. The immigration piece is really big, and I don't think that it's being dealt with appropriately. And to take consumers and shrink your population. Why is there a war in Ukraine? Because there's not enough Russians. They need more population. Why is Taiwan threatened? Because the Chinese population is falling in half. These places have a big, big problem, and it's on their doorstep, and they can't help but see it. That's why India is doing so great. The strongest growth economy in the world, I think, is India. Why? Because the demographics support it, and its future is bright. Well, the American future is bright too, but we need to get our act together when we deal with this immigration. Mexico's doing great. Great population, but our population is getting old.
It's
And we have to be able to deal with
it's interesting, Stan. You raised a good point, because Rich, going back to your original question about the Federal Reserve and the president exerting influence on it, the Fed, it's easy to see, only has so much influence on inflation. Whether you are talking about demographics, whether they're in the United States or world demographics, the Fed can't control that. Our Federal Reserve cannot control a ship getting stuck in the Suez Canal, or a strike at a foreign port, or a bad wheat or corn harvest here in the United States. The Fed can only do so much. And right, Stan, I mean, immigration or worldwide demographic changes. And if you look at China, putting as many Chinese as they can into neighboring countries to try to, gain
assimilate.
satellite. It's crazy. What's that?
Assimilate.
Yeah,
They want to suck them in. They need to grow their
absolutely.
population.
Absolutely. So anyway, Rich, that's probably more than you wanted for your
No, that
question
was
about.
great discussion, and yeah, several excellent and valid points. And yeah, I think well worth the little side road there. Very, very crucial to what's going on right now. So
And lenders, to bring this back to the call, I mean, lenders can only do so much. They certainly can't set interest rates at their margins. They can set certain things that are in their control. But in terms of some of the influences that we are seeing on interest rates on a national and global scale, there's very little that they can do about it,
Amen.
if anything. And so many lenders are just, the good lenders out there are kind of playing with the hand that they're dealt to some extent. Interest rates are what they are. Let's figure out how to help our clients.
Well, one of my favorite phrases that I have shared with my team for 40 years is, we're not market makers, we're market exploiters. We don't make how things are. We deal with how things are. And then we want to deal with them more successful than those around us. And if you think that I am so good at this and I'm going to be successful because I'm so good at this, you're crazy. Because you're not that good. Doesn't matter who you are. You can't overcome macro influences in your life. And it's like the little leaguer that would have caught the ball if the sun wasn't in his eyes and the wind wasn't blowing and Tommy didn't call his name from the dugout. Otherwise, he'd have caught that ball. Well, you have to be prepared for every possible scenario and make sure that you are in a position to thrive in the various market possibilities that present themselves to you. And I think that's what differentiates really successful organizations from organizations that explain why it didn't work out. And I hate when people explain to me what happened. A lot of stuff happens, but if you were doing your job and you were prepared, and you went to work and you had saw the world as it is clearly, you can manage the events around you to an outcome that's acceptable. Now, sometimes you said, all right, the level's going to be this deep, right? We have to make sure that we are staffed to manage a level that's that deep. That this is the size of the opportunity, and we're going to get this percentage of it, and that's the size we need to be. And everybody doesn't think about things like that. They think, oh, well, I'm better than that guy, and I'm going to take his lunch. And it's a very cannibalistic approach. And somebody will, and somebody won't. But everybody thinks they will. And that's really not a healthy environment to be in. You're better off seeing the world for what it is.
This is The Big Picture. I'm Rich Swerbinsky with Onward and Upward Consulting, joined as always by my co-host, Rob Krisman. This week, really pleased to have Freedom Mortgage's president and CEO, also minority owner of the Philadelphia Phillies, Stan Middleman, on the show. And Stan, once again, the home builders in the news this past week. Home builder confidence now dropped 3 months in a row. We got housing start data this morning, single family. Housing starts down 2.2% in June from May. Of course, all of this is amidst inventory woes in America. Former President Trump was asked about just housing affordability and inventory as part of the interview we referenced. He immediately went to the home builders, talking about the costs of regulation, not only preventing builders from building more, but also noted they're being forced in many cases to use lesser quality materials. As a result of that, Stan, your thoughts on just this inventory issue in America? I mean, at the end of the day, something has to be done with the home builders, right? I mean,
No. So, you know, I heard that our industry is interest rate sensitive, and it will cycle. So I think what you have to think, first of all, the reports that you're referring to are lagging reports and reflect conditions of a previous period. So I will tell you that they're irrelevant to your ability to predict the future. And they just, it's like looking out the window and saying, oh, it's sunny. Okay, that's nice. And so you've pretty much told me it's sunny. Okay, well, in your case, it was cloudy. But the reality is it kind of is what it is. That report is those reports are lagging reports and reflect the way things were at a different point in time. Now, just so happens that at this point in time, they're not that dissimilar. But what we have seen, and if you look around, there's more houses for sale, right? More current inventory is for sale. There are more people whose mortgage interest rates on their homes are higher than there was 2 years ago. So last year we did about $2 trillion in loans, or $1.5 trillion, and we've been doing about $1.5 trillion, $2 trillion in loans for the last 2 or 3 years at interest rates above 5%. So that means, $4.5 to $6 trillion in home financed properties are above 5%, which is approaching half. At the end of the year this year, we'll start to get maybe a little past half. So you'll be at that new normal. And what holds up the home builders and what holds up inventories is, why would you move if you have a 3% mortgage? Unless you kind of had to. Now, there are some fundamental truths, right? People's lives changed. There's new home buyers coming to the market. And when you look at the good news in production, home building, the builders have been the greatest originators in the country. The most successful financing has come out of the building sector. So could it be better? Yeah. We've got a lot of multi-unit properties coming on on the scene this year. But I think the story is this: as the world gets to new normal, right? More homes are financed above 5% or towards 6%. And as you get changes, just tidal changes, normal cyclical changes in employment, where maybe unemployment's not 3.8%, it gets up to 4.6%. That'll create a somewhat of a movement in interest rate downward. And I think you're going to get some of that interest rate downward. I think you get some change in the spread. And it's more tidal activity than it is, policy. And when that happens and you're at a new normal, competitive opportunities will take place, and you'll see more builder activity. But yeah, I would say that the last thing we want to have happen is governmental intervention in the building trade to force the building a new property. That's silly. It's absolutely silly. And to go back to Rob's earliest point about supply and demand and economics and fundamentals, these things will all work themselves out, and we have to just let it play out. So I'm sad it's cloudy, but take my word for it, it'll be sunny someday soon.
Right. Yeah, I think to continue on with that point, Rich, the fact of the matter is we are in a cyclical business, and you can't, there are people out there who will argue for less government intervention. Less government is better until more government helps their business, in which case they're all for it. And figure it out. And I think that there's been talk of a national housing czar, but that smacks of more government. And do we really want one person or some kind of board telling home builders what and when and who and where?
Depends
and all
what
that
year
kind
you
of
got
thing.
out of Harvard and whether or not you want to nationalize the housing system.
Yeah, I don't think anybody does.
Well, there's
So it'll sort itself out.
a list of people that do, but you don't really want to go through them here. I understand they used to burn witches in one of those towns in New England. So that's one place to start.
Yeah. So supply and demand.
Supply and demand, but the shortage, I mean, it I mean, on the go forward, I agree. I mean, the cyclical nature, builders will start building more. Obviously, rates is a big part of it, but you guys don't feel like that there is a legitimate shortage of homes in America, a gap that needs to be bridged in the years to come. Your thoughts on that?
So Stan, I need to tell you, need to interject here before Rich gets carried away. So I brought up this point, Rich, a few times, and I think you agree. But Stan, I've said that if you were to drive rates down to 0%, and there are no credit hurdles, you would just give anybody a 0% loan, anybody in the nation. What impact would that have? All that's going to do is drive up first-time home buyer home prices. And a few years ago, everybody was complaining that home prices were going up too much. And they're still going up, but at a more moderate pace. And so, be careful what you wish for. So
Well, I'll take you a step further than that. Interest rates fall, mortgage volume goes up, more houses sell, more builders build, and this is 24. And I think all of those things are likely in 25, 26, and 27. But based on the question you just asked, what happens? I think what really happens is you end up in an asset bubble and you get a correction because property values will go up and they will then go up too far. And you have another big problem on the horizon. And remember, I told you we have to deal with things for what they are, not for what we wish they were. You have huge volumes of empty office buildings throughout the land and underutilized commercial space and multifamily buildings that were bought at low interest rates that are going to roll into higher interest rates, that were bought at market caps that won't sustain higher interest rates. And they were bought on midterm borrowing 5 and 7 and 10 years. We're going to start turning around and come due. These loans are held by banks. If we get some bank collapse, and I would suggest that we're probably due for a liquidity event. And I saw I think it was Barclays, put out an item today talking about issues around commercial paper and CLOs. And I think that if we get a liquidity problem, which we are likely to get, and if we have bank failures, that we are going to get an asset correction. And I would suggest that'll happen in 28 because we always have misery on the eights. But if you go back through our lives, the eights of any decade have been problematic. But this is an eight that's going to be problematic with property values that have gone up too far. And when we see our volumes go up and the mortgage originations go up, we're going to see at some point an asset value correction. The stock market's oversold. The commercial properties are oversold. I mean, we can go by asset class, asset class. I don't think that the problem will be led by housing like it was in 08. I think it'll be more like an 88 problem that was led by commercial office that led us into that savings and loan crisis and that huge RTC asset correction. But if we look at the biggest asset corrections that we've had, they've happened in environments after we've seen a lot of appreciation in housing, as well as other asset classes. And I think this is coming down the highway. And I think that there's going to be issues that we're going to have to deal with. And people that are running their businesses in lending need to be savvy enough to see 4 and 5 years into the future, to know how they're going to manage their assets, their investments, their business, their population, and the way they're going to run their business. If I'm trying to teach this to my kids, that you have to understand the way the world works. And I'm here today to share that with you. Is I've seen this movie before. This is not an original script.
Home price is up 43.5% in America the last 4 years, certainly straying from the historical norms. And
I've heard about this thing called gravity.
Right, exactly. Yeah. I've been screaming about this for a while. Like, people act like this is normal, that homes have gone up basically 50% in value the last 4 years, when 2 to 3%.
But don't you know houses always go up in value?
They do, just not to these levels, but
not evenly. And that's the problem with the administration today and the outlook that some people have, is they say over time houses go up in value. Yes, that's true, but it goes up in spurts and then it comes down, and the next peak often becomes the following trough. So we've just passed the peak that we hit in 07 in valuations. We just passed that a couple of years ago. I would suspect that this asset will come back to that as the next trough.
Interesting.
So if you think of it kind of like steps, we're going to come back down to that step. before it resumes its climb up, which means that past that peak now, we probably have room to get another 10% higher before we start going lower.
Stan, I have a question for you. Little off script here, not too much.
I didn't
So
get
my
the script, by the way, so maybe that's my problem.
no, this is fairly, easy, or maybe not so easy, but I'm fascinated with demographics, and I'm fascinated with the fact that what my grandparents thought of housing, what my grandparents thought of housing, what my parents thought of housing, what people think of housing now, what the next generations think of housing. And I continue to tell folks, audiences, whoever, that the big difference is that we are dealing with homes, not necessarily houses. My parents, they never refinanced to take money out. They never viewed it as a statistic. They viewed it as their home. They had to live somewhere, and it's a home. And I think a lot of people on this call realize that when they're talking to a borrower, that borrower is thinking home, want a home, and not necessarily a house. Stan, if you, in your history up until now, in your career, do you think that I want a home mentality is changing with the 70 million millennials who view it as more like a stock trading account or a Bitcoin account? Or do you think that they're going to continue with this is a home and I need a home mentality?
Well, I think there's two pieces to that question that's really important. One is I need a place to live. Do I have to own it, or do I not have to own it? Okay, and there are other nations where the nations are primarily renters, not owners. So that's a different question. Um, this is kind of an odd thing for somebody that's built a career in the home finance business. But I'm a firm believer that the best mortgage is no mortgage. And if you're going to build your career and you're going to build wealth, one of the things that you should do as a responsible human being is take into account that charity should begin at home. And the first thing you should do is get your house paid off so you don't have to worry about a home, so that you don't have to worry about your kids having a place to live that's convenient to go to school, that's in the right neighborhood that you want to be in, to live your life the way you want to live your life. I think that's important. And I've always made it a priority to make sure that I paid off my home. And I didn't want to have to worry about taking risks at work because of the impact those risks may have on my family. So I always made it a priority to personally delever. Now, I'm a person that uses leverage in my business, but I don't think that from a place to live, that leverage is the right way to build wealth. And that's a misapplied thesis in our country. And by government officials that promote that. I believe people should own their home. Owning your home builds better and stronger neighborhoods that are safer, and build stronger families that create better citizens that contribute to the community. I think all those things are true. But I don't think that you should look at it as a wealth engine. And if you want to use your house to consolidate your bills to lower your monthly payments, that makes sense to me. If you want to use your house to pay for your daughter's wedding, that makes sense to me. If you want to use your house as a vehicle to pay for your children's education so that they don't have big student loan, that makes sense to me. But then you should go about the business of paying those loans off, because you should not leave yourself personally exposed to the risks. And there are severe economic risks in a volatile economic community like the one that we live in that is cyclical in nature. You shouldn't be making personal home decisions based on cyclicality of economics, right? unless you're really good at it. So when I hear my eye doctor talking about investing in triplexes, and that he's going to retire off of the money he's going to make because he's going to flip houses, yeah, that worries me. So I'm not hearing that now, but I heard it in '08 when taxi drivers are telling you, "Oh yeah, I do this. This is my side gig. I really flip homes for a living." That worries me. So, yeah, we shouldn't be looking at homes as leverage. And by the way, these same people are the ones that want to borrow against their house to go buy real estate at the high point in the market. And if you were paying attention to what I just said earlier, the last peak becomes the next trough. That means it goes up and down. It doesn't go straight up in an even line. And if your personal timing gets caught in the wrong point on that time, I know a guy who's my age that has bought a house 5 times at the top of markets. He's just got a knack for it. He pays too much for every house that he buys and never builds any equity because it's just the way his life played out. But he buys them as a place to live, not as an investment. So he buys a house he can afford. But he's never happy about the way it works out. And it's just an amusing story because it's amusing. But actually, I would say it's statistically unlikely that there's a lot of people like him. But it is an amusing story.
This is The Big Picture. Just a couple minutes left.
Rich, we're out of time.
Freedom Mortgage CEO Stan Middleman. And Stan, I'd be remiss. The government is as usual, very active in our business. DOJ, weighing in on the NAR settlement. Still, maybe their hands in the cookie jar there a little bit, based on some recent reporting. We've had HUD come out and levy some fines. CFPB. IMB market share we saw in the HMDA data last year up to almost 70% in America. It feels like the U.S. government is just a little uncomfortable. The banks are so regulated under the frameworks of FDIC and OCC. Any thoughts on just the government's role in our business right now?
Well, they need things to do. They all have jobs there, right? So, and they all have a perspective that the only way they can grow in their careers is if they work in the DOJ is to bring people to justice. So they're looking for people to bring to justice. And I think that there's a lot of that. I think that it's just the theory, right? That if you have to knock somebody else down to lift you up, is that the right thing to do? There's nothing wrong with seeking justice. There's something wrong with trying to create opportunity to create justice where there was no injustice. And I think that fighting crime is a noble responsibility. Creating crimes to fight may be a little less noble. And I think that when you have organizations that create regulations to create gotcha moments is probably inappropriate. And to build careers around your ability to find targets, it just doesn't seem right to me. But on a larger scale, there are parts of the population that are underserved, and there are voices that are unheard, and there are people that deserve more attention than they get. And I'm all in favor of doing that. But can't we do that by making people better without making other people worse? Can't we compel people to be more forthright and do more of the right things to solve the problems in our society, rather than finding somebody to blame for the things that somebody else did wrong in our society? And I think that this historical game of blame is inappropriate. We should be looking forward and trying to build solutions that don't prosecute someone for something that happened before, but incent people to solve the problems that we want solved in the future. And I don't think we look forward enough. I think we spend too much time driving through the rearview mirror and not enough time trying to give people purpose to go forward. I want to be successful on purpose with purpose. And I'd like to be able to do the right thing because it's the right thing, not because I'm afraid to do the wrong thing. And I think that if we can take those handcuffs off of our businesses, I think that we can all be much more successful.
Well said, and a great way to bring it home for the big picture this week. I want to thank all of our attendees on the live. Most of you listen to this as a podcast or on our YouTube channel, but we do it live every week. Go to watchthebigpicture.com if you want to register for the live session every week. And I want to thank, of course, Rob and Stan, who has a biography coming out. We have it linked in the chat. Stan, any thoughts on your upcoming biography? I think it releases September 17th.
Yeah, I think it'll be good for my grandchildren to read the nonsense that I went through in my life to make their lives what it was. But beyond that, it may be fun for somebody to read. But I did it really as a personal project to tie my family into what it took to get me to the things that I've achieved.
You don't want to break any news. I've seen Pitbull, I've seen Andy Grammer, I've seen just a litany of incredible performers on the Freedom Dime throughout my mortgage career. Any Taylor Swift this year in October?
There's a rumor that there might be another female performer that has been very successful through her career. I don't want to let the cat out of the bag, but we have great expectations that everybody's going to be delighted. Certainly a top level performer.
Pat Benatar.
Maybe even more popular than Pat.
Good stuff.
Somebody from ABBA? Oh, wow.
Good stuff. Can't wait to hear who it is. And Stan, thank you once again for joining us, taking time out of your busy schedule to join us. Really enjoyed the conversation and appreciate you being on with us today.
Yes, thank you, Stan.
Hey, thanks for having me. I really enjoyed it. You guys are fun.
Excellent. And to our attendees, we will see you next week, every Thursday, 3 p.m. Eastern on the live. Of course, you could find us on Pod and on YouTube just after the live show happens every week. So until next week, have a great rest of the week and weekend, and we'll see you on the big picture next week, everyone. Take care.
Go Guardians.
Go Guardians. Love it.